Hey guys, good afternoon, everybody. It is Monday, April 3rd, 1:58 right now. Our scheduled mentoring sessions for 2 p.m. So I'm gonna go ahead and set up this room real quick, and then we'll get started with our session for today. So it's a couple of things here to update, and we should be good to go. That's set up. All right, a few more things right here. All right, perfect. Let me get this link sent out to you guys here in the premium. And we should be good to go. All right. All right, cool. Got the link sent out right here. Let's get a few moments for people to make their way in. All right, I'm just going to post this to a few more places and we should be good to go. All right, looks like we're good to go. All right, guys, good afternoon, everybody. Today is Monday, April 3rd. It is 2 p.m. right now. Scheduled time for our mentoring session is 2 p.m. So if there's any questions that you guys have, feel free to put your questions in the chat. Otherwise, I don't really have anything specific to cover today. I think I'll probably just go over whatever entries showed up, I guess, after the live session, because there just wasn't any trades during the live. And then we'll just clear up any confusion that you guys might have regarding the high-level momentum scalp. If there's anything specific that you guys want us to cover, feel free to drop whatever questions you guys have, and we'll cover whatever you guys need help with. So, all right, solid. Now, let's see, question from HP. HP is asking, for the momentum scalp, if we're holding a trade and we get a signal in the opposite, should we exit our position? No. So if you're in a position already, you should hold it, because there's no criteria where you should be exiting early. If all the criteria is met, typically you're not going to get an opposite signal, and that trade's usually going to be running for a while. So yeah, we've never really done that. Like if you're confident about a position, you got to take it, you got to hold on to it. You can't just get scared and pull out just because you get an opposite signal, right? There's a reason why we have the criteria that we follow. So short answer to your question is no. I'm not sure which position you're talking about. HP, are you talking about the high-level momentum scalp or the momentum scalp? Because you mentioned momentum scalp, but that's a totally different strategy. So I'm not sure if you're talking about that specific one. Okay, yeah, for the high-level momentum scalp, no. If you get an entry, you just got to hold on to the position. If you don't feel comfortable, then you should pull out. So if you feel that you have an opposite signal and you feel nervous and you don't really want to hold on to it, then yeah, I highly recommend you pull it. But there's no criteria really telling you to do that. So unless there's a criteria telling you to do that, if it says that in the requirements, then do it. But if it's not, then you got to stick to the strategy. If you have an example of that, you could bring it up to me and I can see, but I don't think there's anything that really comes up like that. The way that strategy is designed is that you're supposed to be catching tops and bottoms, and you catch momentum, pushing away from that top or bottom. So we don't really see those types of setups. You'll see setups like that applying other strategies, but not really so often for this specific one. So if there's one that you saw and one that you're you know, a little confused about, we can pull it up, but I don't think I've seen any that has happened like that recently. I know we had a couple of like weird entries last week, but not necessarily for you know, for this week. So yeah, unless there's a specific one, we can pull it up. But other than that, I guess we can look back to see if there's anything from today. Let me see. I'll go back to or rewind it to 12. 12 is usually the cutoff for entries. So we'll just see if there's anything here that might fit that criteria, or you know, something similar to it. So sorry. Let's see who's here. Hey, Martha. Hey, Kenny. All right, so let's just go back and we'll look at some entries here. And I'll just see if I can find some examples to like better illustrate what I meant earlier about the position moving. Let's see. So HP said that he took a trade at 307, but he knows that it was outside of the time that we normally trade. So 307, I'm assuming that's like 12:07 my time, I believe, because if you're East Coast time, then that's 3 hours ahead. Are you East Coast time, HP? I can look it up. So we can look up which entry. So you said 307. I'm assuming it's this one right here, right? Yeah, this one right here. So the reason why I don't like taking trades around 12 is because this is typically where you get that mid-market reversal type fake out. So usual cutoff is, I mean, you can trade until 12, but I think after 12 is usually the time where you want to stop trading, because this is typically where, you know, mid-market reversal or mid-market fake outs tend to happen. The mid-market reversal typically will happen like around mid-session, like say 10:30 around this time. And then you can see how the fake outs happen right here, because this is close to market close. You know, you took your entry at after 12, and the market closes technically around like 1:30. So you start to get a lot of weird movement around this period right here between this time period. So the one that you took looks like it was right here. Let's go and replay that to that candle. So it looks like the criteria was met. But let's just pull through real quick and see if I can see if there's anything that could have affected the market. I know the Fed was speaking today, so let me check the calendar real quick. So it was around 12. The Fed spoke right here at 1 o'clock. So I don't think there is, I mean, aside from like normal market movement around 12, I don't think there was anything else that really affected yet. The Fed spoke at 1, so that was like an hour after your entry, but your entry is right here. Just looking at the entry here, it looks like everything does kind of line up here. The only problem that I can see here just by eyeballing it is that this candle is pretty big compared to the others. So we do have a higher high right here. We have a sell signal right here. So if you took this first short right there, candle's not that big, but it's just big compared to the other candles. So having this set up like this, yeah, I can see how it reversed on you right there. Yeah, so this is something that I typically see very often when it happens after 12. You get a lot of fake outs. So this is the entry that HP took. The criteria is met, everything lines up perfectly, but I think the main thing here that would have, well, I for sure wouldn't have been trading around this time. I never trade after 12. The main thing right here is that you got caught in the fake out. So price kind of faked out here. It looked like price was going to reverse back down, but the main thing right here was that it was in a very strong bullish trend. So that's another reason why I would be kind of careful about taking sells, especially if you're taking when volatility is kind of dying down. But yeah, HP also mentioned Trujillo was concerned about the big candle. That's because when you see a candle like this is usually a fake out, right? If you look back to like any time you have a huge candle like that, not necessarily a fake out, but it's a retracement. So you see it fakes out and then it retraces back up. So like, I mean, there wasn't, okay, so there's another example right here. This is one that happened like at 6:58, kind of same setup that you looked at, right? That you took earlier at HP. So let me just mark this up for you right here. So it's like pretty much the same exact setup. You can see over here, price was pushing up. You had kind of a big red candle here compared to the other candles, and then it faked out, went right back up. So that's just one thing to look out for. The reason why I probably wouldn't be looking for a sell here, or where I would probably be careful about taking sells, is because the overall bias was very strong. Like if you look over here at the 4 hour, 1 hour, and 30 minute, we were discussing this even during the during the live session. I mentioned that the sentiment was so strong for a buy. So I wasn't really looking for a sell here at all. I was kind of waiting for price to correct back up. So that's another reason why I would be a little careful. There's like little things that you can look at to kind of give you confidence with a position. And just looking at the charts here, I wouldn't have any confidence with a sell. Like I probably would just let the trade run. Like if I saw any sells, I would let the trade play out, and then I just wouldn't take it. Let me check the sentiment right now to see what it looked like. Let's see, sentiment right now is, it's still the same, 67. So it's 33.67. So I for sure would be very cautious about taking sells, especially during times where volatility is kind of low. So yeah, unfortunately, for that trade right there, everything else lines up. So your criteria, identifying the position was fine. HP, the only main red flag here would be the fact that the market was so strong for a buy, and also you're kind of trading the direction of retail. So yeah, it's unfortunate that you got caught in this position, but I think in the future, just make sure not to trade after 12, because the market does start to move kind of funky around 12. That's why my cutoff is 12 completely. Typically, if I'm trading till 9. But yeah, unfortunately, got caught in this this little fake out entry. I see a question from Martha. Martha's asking, hi, Sean. I noticed when we are waiting for the momentum signal on the high-low momentum scalp, if there is a candle in between that hits pivot 2, you invalidate the entry. Is this correct? Sorry, Martha, let me reread that question again. So let me read that one more time, Martha. If there is a candle in between that hits pivot 2, you invalidate the entry. I don't think I've ever done that. Let me see if I could. Do you have an example of like what you're referring to, Martha? Because we don't, that's not part of the criteria. It could, like, price can touch the pivot, it just can't break and close above it. So if it breaks and closes above it, then yeah, that's, of course it's invalidated, right? Because the pivot's already been broken and closed past it. But price can touch the pivot, it just can't close above it. That's the main thing. Do you have an entry that you were referring to, Martha? Because you mentioned, let me see. See, HP said, God, I didn't know we needed to take into consideration regarding the bias. So the thing is, you don't have to take into consideration taking the bias, HP, but you kind of went out of the criteria, right? The requirements for the strategy is to trade until like 9 o'clock max, but you traded till like 12. So if you're trading till 12, you obviously want to use like other confluences, right? Because you're like way out of the trading time for this specific strategy. If you're trading a different strategy, like a momentum scalp, like a regular momentum scalp, it would make sense because you're looking for a buy here. But if you're trading the high-low momentum scalp, you know, this strategy is meant to be traded between 6 and 9, because that's how we did our testing. We did the testing throughout the day, and you know, obviously that there was a lot more losses that happened after that time period from over here. So you can see like whenever all the losses happened, they were like later in the session. So if you're applying the strategy, you don't really like, it's not required to apply the bias. But if you're going to trade outside, you know, the trading hours for this specific testing, then you should use bias just to confirm things. Because, you know, it's kind of like it's that same example that I typically use for you guys. Like, you know, you're not going to stand in front of a speeding train, right, praying that it'll stop. It's kind of like you taking a trade here. You're taking a trade for a sell when everything here is going so strong to the upside. You're just praying that the price is going to turn the other way. But realistically, it's not going to turn the other way because everything's pointing towards a buy. Like if you looked at everything here, trend, retail sentiment, I mean, pretty much everything, like any confluence that would indicate, like there's nothing here that I would look at and I would say, okay, I'm going to take a sell, right? Because I'm like, okay, this is strong for a buy. Higher time frames are strong for a buy, and higher time frames over here are strong for a buy as well, except for the 1 minute. But at the time of your entry, it was very strong for a buy. Like if you rewinded here at 12 o'clock, let me just rewind this. Like if I was trading at 12 o'clock and I saw this right here, I for sure would not take a sell, right? Because everything here is very strong for a buy. So if you're going to trade after like 9 o'clock, I would use the bias because it kind of gives you, it's like obvious, right? There's no reason to take a sell here at any point, but it is not part of the criteria, HP. So if you're trading before 9 o'clock, you don't have to look at the bias. But if you're trading after that, you want to make sure that you have an idea where price is running, because you're kind of just taking a bet at that point. Like you see this red candle right here, but everything here is very strong for a buy. So you're kind of just taking a gamble, right? Obviously, when you're trading, you want to take a gamble when it's in your favor, but you kind of took one that was like completely against everything. So in the future, that's just kind of what you should look at, but not really. Like if you're trading before that time, it's fine. Like during the live session today, I was looking for trades in both directions because volatility was high. But if you're trading after, the volatility is kind of low. So you kind of want to go where the movement's going. Yeah, no problem, HP. I know it happens. Sometimes you make mistakes. And I don't put the criteria there because it's not required. But if you're going to trade outside and just trade on your own, although it's not required, it'd be good to actually like go and take a look at those things. Because even this morning we were looking for buys, but if a sell came up, I would have taken it if it actually came up, earlier this morning. Because we did have like price did come down pretty heavy from this period, like right here, from basically 630 to 8. But I still wasn't getting lured into these sells here. I was waiting for price to swing back to the upside. So it's all good. We'll bounce back from that. All right, so back to Martha's question. So Martha's asking, and I kind of understand what you're asking, Martha. Let me go back to the entry from this morning that I took. Because I think you're kind of confused about touching and breaking and closing. Right. So let me just, and I could kind of, I understand what you're saying. So like, right, for example, right here, this is the trade that we took this morning, right? Just because price touched the pivot didn't mean that we avoided the entry. We only avoid the entry if price breaks and close above it. So like, for example, right here, price broke and closed above it, right? That's why we don't take it, because it invalidates the third required criteria. So the third requirement right here, you want to confirm that price breaks and closes past it, right? If price has already broken and closed past it, this is impossible for it to happen again because it's already happened. Does that make sense, Martha? Because I think this is what you're talking about, right? Yeah. So we're not avoiding it because it's touching it. We're avoiding it because it broke and closed past it. Because if there was a buy signal here, then we could take the trade. But if there's no buy signal there and price already broke and closed past it, then we can't take the entry. So just a reminder, guys, when you guys are looking at these strategies, just look at the requirements, right? If you could read the requirements out loud and just like take them step by step, that's where you guys could confirm it. Because the thing here is we had everything here. There's a lower low right here. But there was no step 2, right? So there was step 1, step 2 didn't happen, but step 3 happened. So since there was no step 2, it was impossible for us to move on to step 3. So the buy signal came up over here on the next candle, but when this buy signal over here came up, this over here was pretty much invalidated because this candle right here already broke and closed past it. So step 1, identify a higher high. Step 2, identify a valid momentum signal. Step 3, confirm price break and close past pivots 1 and 2, or 2. And that couldn't be confirmed because this candle here already broke past it. So yeah. Just make sure to go through the step by step, and then you'll be able to really confirm if that happens. So yeah, back to what I was just saying, Martha, it's fine. It can touch it. It just can't break and close past it. That's the main thing that we're looking for. All right. Yeah, no problem, Martha. This is how you guys learn. If you guys have any questions, if there's anything you're confused about, just ask whatever questions you guys have. This is your guys' time to really drill down on things that are confusing to you, because something as small as that can make all the difference for, like, say, Martha, if she's looking for an entry. If she thought this whole time that price can't touch pivot 2, in the future, she's probably going to be thinking that that's what she's looking for, but realistically it's not that. So all right, so let's see, Martha's asking if we can go over the pivot scalp strategy. So let me see if I can put the strategy up here. Yeah, so for the pivot scalp strategy, you're looking for a buy here. I'll use this right here as an example. Or I'll just use a different all right, so let's go back to this one right here. The only reason I'm going to this one is because so I only know this because we were looking at the sentiment Right. I mean, we're looking at everything today. So looking at this right here, this entry came up at 9:12, right? So I'm gonna go here. I'm just gonna rewind the time to 9:12 so that we can kind of confirm everything. The only reason we can confirm this here is because we already knew what the sentiment stuff was, since we were looking at this during the live session, and this entry came slightly after. There's no entries during the live session because price was dropping. You can see over here from 6:30 to 8. Let me just go and mark this up over here. Or I mean, we could even look at this one over here because there was an entry down here. And this one over here too. I guess we could rewind this. Let me just rewind it to like earlier this morning, because this morning we already knew price was bullish because I analyzed it for you guys during the live session. So let me just go over here to 6:30 because we already confirmed this. And again, guys, if you guys want to go back and confirm whatever the bias was and stuff like that, you guys are more than welcome to do that. Just pull up the session from the day that you're testing. And I typically do a full analysis in the morning so you can kind of see where price is going. So from this morning, I mentioned that we had a bullish bias, right? That's why we were kind of looking for a buy here. When price was coming down during the live session, I mentioned, I'm going to wait for price to, establish a low and then swing back up, but it just never happened. Price just kept coming down between like 7 and 8. And then once it hit 8, it was just already too late. So we couldn't really look for an entry. I mean, technically you could have waited, but going back to the criteria over here for this specific strategy, first you want to confirm the overall bias, right? So the overall bias right here was, first we'll look at retail sentiment. If you guys remembered from this morning, retail sentiment hasn't changed. It's been the same all morning. So retail sentiment right here indicated that 67% of retail traders were currently selling at the time. And with this confirmation, this indicates that you want to do the opposite. So you want to do the opposite of retail. Retail sentiment shows that people are selling, so you want to go ahead and buy. So with that said, for the first criteria here, we want to look for a buy. Second criteria is the fundamental bias. In order to identify the fundamental bias, you're going to pull up CNBC, and you want to see where the fundamentals are going. So if you refresh this here, you can see that the fundamentals were up over 100 points, over 200 points pretty much all morning. If you guys want to go on and rewatch the live session, you can see that this morning I mentioned that that this right here indicated that it was bullish, right? Because if you guys remember from this morning, I mentioned that, okay, the Dow was currently up like very heavily. The S&P was only up a little bit, but the fundamentals here were obviously very strong for a buy. Anything above 100 points is going to be decent for a buy. Anything past that, like 200 points or higher, is going to confirm a strong bullish bias. So, okay, so Martha said her confusion is with fundamental bias. So where are you confused with that? Sorry, Martha, I keep calling you Maria. Martha, where are you confused with that? So I can, because it's really simple. It's just, is it above 100 points or is it below 100 points, right? It was obviously above 100 points all morning, so that indicates that fundamentals are bullish. Okay, gotcha. So you just didn't know the threshold. Gotcha. Yeah. So if it's consistently above 100 points, then that's pretty much all you're looking for. So, with that said, looking back at the criteria here, confirm overall bias. Retail sentiment was bearish, so you're looking for a buy. Fundamental bias here was bullish. Technical bias here is also bullish, right? Because the 1 minute over here is above the pivots. Trend meter is green, pivots are angling up. We have the same thing here with the 5 and 10. So with that said, you pretty much are looking only for buys for this strategy if you were applying it today. So first, you want to confirm overall bias. Overall bias is bullish. Second, you want to confirm the valid momentum signal, which is right here. It's a valid signal if you have a buy signal with a green bullish candle within it. So if you have that set up right there, that's going to be the long position, right? You have that set up right there. Next, you want to confirm price is above or below the pivots 3 and 4. You can see over here, price is obviously above all the pivots. So with that said, you enter this for a quick 100 pip move. You let the trade run. And obviously you can see right there, full TP, right? That's the first entry. So this one came up over here at 6:37 this morning. That's the first entry. And I think price kept going along, and there was another one that came up over here as well. So there goes a retracement signal. And then we have another one right here. Same thing, right? Bullish momentum signal. We already confirmed overall bias is bullish. Valid momentum signal right there for a buy. Confirm price was above the pivots. It's above the pivots. You take that again for a buy right there. Same setup, go for 100 pips. Let the trade run, full TP. So 2 full TPs right there. And I think there was probably another one later All right, so at this point right here, you can see that price is no longer bullish, right? I mean, the trend is no longer bullish on the 1 minute. So you can't take any more buys at this time. Price needs to swing right back above. So at this point, price is coming up right here. I know we have a buy signal, but the trend is currently bearish. So at this point, you would not be looking for this to, you wouldn't be like looking to take any entries here because price is currently bearish. So nothing here. We have a buy signal here. The trend here is somewhat bullish. So, you know, for some people, they might have taken this trade because price started to shift to the upside. Price was above the pivots here. So this technically would still fit criteria. But for me personally, I only like taking trades when it's very strong. So this is more of a bullish neutral confirmation because the trend meter down below is blue. However, price is above the pivot. So this technically still would fit criteria for a buy here if you were looking for a buy. The reason why I would have been okay with it is because the bias was so strong. Retail sentiment was, you know, above 67%. Fundamental bias was very strong for a buy. It was like up like 200 or 300 points. And the technicals here, everything's bullish except for the 1 minute. I mean, it's bullish, but it's not very bullish. So, I mean, depending on your criteria, if you're okay with taking a trade that's not super bullish, then you might have taken this one here, but I probably would have skipped it for me personally. I only like taking trades when I know for sure they're going to hit. Here's another entry right here. Momentum with a buy signal. Trend meters green. Pivots are angling up. Pivots are bullish. Same setup again. 100 pips. And there you go. Full TP right there. And there's another one right here right after. So there's a full TP right there. And there's also another one right here. So there's actually two of them. So pretty much for this morning session, it looks like there was about 1, 2, 3, 4, 5 full TP. So 5 pivot scalp entries that came up for full TP. We don't typically apply this strategy as often, but other people still do apply it. So there's a couple of people in the group who still apply this strategy along with the high-low scalp. And they locked in some profit off this. So, you know, I have a handful of strategies that you guys can apply. They all work perfectly fine, but we mainly focus on the high-low momentum scalp during the live sessions. Another question from Martha. She's asking, retail sentiment has to be over 50%. It's over 60%, not 50. If it's 50, it wouldn't make sense, right, Martha? Because if you're looking at this here and it's 50-50, then you have no sentiment, right? That's just neutral. Because if there's 50% of retail traders who are buying and 50% of retail traders who are selling, it does make sense, right? You're not gonna choose one side or the other because it can go either way. So you want it to be above 60 to 65%. So if it's so say for example here it's 67%. Obviously you can do the opposite and buy, and if this is 65% on the long side, you can go ahead and sell because you're going to be doing opposite of everybody else. Martha's asking, and I should be checking overall bias throughout the session. I mean, you should check it whenever you're taking an entry because it doesn't really matter like throughout the session, because if there's no entry there, there's nothing for you to take, right? So say, for example, you see a setup kind of setting up right here, like for example, the buys. At this point, you can start looking for retail sentiment or overall bias. But typically, bias doesn't change very often. So if you look at the bias in the morning, like at 6:30, like right before market opens, it's typically going to stay that same way throughout the entire session if you're trading for like an hour or 2 hours. But realistically, you don't have to check it that often. I mean, you can check it if you get bored, you know, obviously you're gonna have time in between. You can check the overall bias, but for the most part, fundamentals are going to stay the same throughout the session. So say the market opens, like this morning, market opened and fundamentals were up 200 points. It stayed above that point pretty much all session. Even though price was dropping right here, the fundamentals are still very strong. So it's, you know, for the most part, it's going to stay where it's at. The only thing that will really change is going to be the trend. So that's the one thing that you might want to be focused on, Martha, because you can see here that the trend shifted, right? Like even though the fundamentals are very strong for bullish, you can see price did drop here for a good, you know, hour, 2 hours. So price kind of shifted right here for about an hour, 56 minutes, but you can see that price ended up correcting. At this point, price pushed right back up. And you already knew what the overall bias was because it was pretty much bullish all morning. So you can see right there that price corrected and it shot all the way back up. So that's why bias is somewhat important if you guys are looking for those longer term moves, because if you have bias, you know that this is temporary. If price drops like this is only temporary. And then after that, price ends up correcting right back to the upside. Yeah, no problem, Martha. So if there's any other questions regarding this, you know, let me know and we can cover whatever you need help with. Otherwise, it's pretty straightforward. I mean, you know, a lot of this stuff is going to come with time. You know, it's just going to be eventually it's going to be second nature to you. Like for me, you can ask me whatever question about any of the strategies, and I've been applying these strategies for years. So like I don't really have to think about it. You can ask me like whatever that you have that you're confused with, and I can just come up with a solution pretty quickly. So, you know, the more you apply the strategies, the more it'll make sense. But again, you know, as I've mentioned before, guys, make sure that you guys focus on just a few strategies. Because like if you're trying to master the high-low momentum scalp, like for example, today you're still kind of confused with the high-low momentum scalp, right, Martha? If you start to learn the high-low, if you're still learning the momentum scalp, and then now you're trying to learn the pivot scalp, you're going to mix the two strategies up, and then you're going to mess them both up, right? So just a reminder, guys, don't move too fast. If you guys are still struggling with one strategy, just stick to that one strategy until you've mastered it. Once you've mastered it, then go ahead and move on to the next one. Because the last thing you want to do is learn two strategies at once, and then you mix the criteria. Because the high-level momentum scalp doesn't require very much. It just requires the requirements to be met. But the pivot scalp, it has a lot more criteria to it. So just want to give you guys a heads up, not to scare you guys into like not learning other strategies, but I just want to make sure that there's no confusion. Because this one, I think this is, it's not difficult, but I think it's a little more confusing because unless you were around during the time where we used to confirm overall bias every morning, this is something that a lot of people forget to look at. They just look straight for the criteria below steps 2 and 3, but realistically, if step 1 isn't met, then there's no entry. Today, there was step 1 because it was very strong for a bullish bias, but the market isn't always very bullish like that. Like last week and last month, price was kind of going back and forth a lot, so it's hard to confirm this. So just make sure you guys look at every criteria step by step so that you guys don't confuse any of the criteria and requirements. All right, so next question is from Kenny. Kenny's asking if we can go over the breakout strategy. So you're talking about the breakout, the regular breakout, right, Kenny? So let's go over here to market open. So I think I'm pretty sure you're referring to the original breakout. Kenny, so like looking at this here, the first criteria is to look for entry after New York Stock Exchange open at 6:30 a.m. Pacific time. So market open right here at 6:30. So basically anything after 6:30. So there goes the opening candle right there at 6:30. Next, you want to confirm the bias. It's optional, but highly recommended. If you guys remember from this morning, the bias from the charts were bullish. Retail sentiment was, I think, 67% short. Fundamentals were up 200 points. Technicals here were pretty much bullish except for the 1 minute time frame. So for the most part, we were basically looking for a buy here for the breakout. So once you confirm those two steps, the third step is to confirm the direction of momentum. Right here, we have a sell momentum, but it's against bias. So depending on where you were looking for, you could have looked for a sell here, but there was never a strong red candle that came up here. This one had a huge wick on the bottom, so you wouldn't have taken that for a sell. This right here was a doji. There's no confirmation there. And it's only valid for the first 5 minutes of open. So basically, you're looking for a buy signal to come up over here with a strong green candle. If you don't get that, then there's no entry for the breakout. So there's no breakout for today, Kenny, if you can see here. Let me just mark up opening price. So opening price is right here at 6:30. We had a sell momentum, but the overall bias was bullish, right? So there is no buy signal here. So it's impossible for you to take a breakout this morning. So for this morning here, today, there is no breakout. You need a buy signal and you need a strong green candle. So I'm not sure if you took a breakout today, but there was no breakout. Yeah, because the buy signal didn't come up until 6:37. This is too late. At this point, it's already too far into the session. It's past the first 5 minutes. No entry for the breakout. Let me go back a little bit and I'll see if there's any entries from Friday for the breakout. So it's hard for me to go back and look at this because I don't know what the bias was from that day. It's just a little too far back, but I mean, I could try to see if there was an entry here, but I don't think there was. It's just a little too difficult to confirm the bias here. Okay, so let's go back to Friday over here. So we're just going to assume the bias is bullish, right? The only reason I'm going to assume that the bias is bullish is because the trend was bullish here. Price was above the pivots, trend meter was green, pivots are angling up. This looks like criteria for a possible buy. However, it's optional, so you don't really have to confirm the bias. It is recommended though. So, I put optional but highly recommended. Technically, it should be a requirement, but if you put that as a requirement, you're going to miss a lot of entries because a lot of the times the market isn't really strong in bias for one direction. So going back over the criteria here, you're looking for entry after 6:30 a.m. You're confirming bias. We're going to assume it's bullish here. You want to confirm the direction of momentum. There's a buy signal right here. You want to confirm a strong candle in the direction of momentum. So we have a strong candle right here. It's a buy signal with a strong green candle. As you can see right here, the wick on top isn't huge, right? It's decent size, but it's not big enough to really confirm that this here is a weak candle. So for me personally, I think this here would have been the breakout because we have a buy signal here. Overall trend is bullish. We can assume that the overall bias is bullish, but I can't really confirm it because this is on Friday. You can't go back and check data that was on Friday when it's Monday today. So with that said, this here would be the breakout entry. You would enter a long position right here. Your TP stop loss is 500 pips. And if you let the trade run, this is the breakout. So you can see how it bounces around a bit. I don't know if it actually hits. This thing kind of ran for a long time on Friday, but it looks like eventually it does hit. Yeah, so it took a while for it to hit, but eventually it did hit at about 8:03. So this trade pretty much ran for about, an hour and 32 minutes. Very long hold for a breakout. Typically the breakout hits right away. But this one over here took a very, very long time. I probably would have pulled out early if price was up here, really close to TP. But this is an example of the breakout, Kenny. So you're looking for entry after 6:30. You're looking for a strong momentum or a strong candle in the direction of momentum. We had a buy signal right here, and that would have been your entry for the breakout. Again, if you would have skipped this one, because I know some people probably wouldn't take the opening candle, you'd have another opportunity right here. So let me just go back a little bit. Because I know some people don't take the candle on open. So again, right here, if you're looking for the entry, there's another opportunity that came up right here. Confirm overall bias. We assume that it was bullish. Momentum right here is bullish. If you didn't take that one there, this would be another opportunity. There's another strong green candle right here. There goes the setup. You let the trade run. But again, it takes a really, really long time. So at this time, I probably would have just pulled out of this position in profit. I probably wouldn't have even held on to it for that long because it's way too long of a hold for this specific strategy. But you can see here, eventually it did hit. Yeah, the strategy typically hits like right away, but the market was kind of moving sideways on Friday. So that's another example of the breakout. See, CT said usually when price finishes at the end of the day is what the bias was. Almost every day it ends up at bias. Yeah, and I agree with you too, CT. Typically, whatever the bias was in the morning and at the end of the session, it's usually the same. That's why the bias isn't really required to be looked at very often because it typically will stay the same throughout the day. So let's go to Thursday real quick and see if there's a breakout over here. Okay, same situation. I'll go to 6:30. All right, so again here, guys, I can't really confirm what the bias was, but we're just going to assume that it was bearish. The reason why I'm going to say it's bearish is because price here is bearish with regard to the trend. Price is below the pivots, trend meter is red, pivots are angling down. This is the opening candle right here at 6:30. So look for entry after 6:30. This is a 6:30 candle. The entry would have came on right after at 6:31. Confirm overall bias. We're going to assume that it was bearish. Confirm direction of momentum. We have a sell momentum here, so we're obviously looking for a sell. Confirm a strong candle in the direction of momentum. Right here, we have a strong red candle. There's a strong red candle, little to no wick on the bottom side. So this right here would be an entry for the breakout for a sell. So this right here would be the breakout. Again, you let the trade run. You can see it kind of takes a long time to hit, but eventually it does hit. So for this trade right here, it would have taken about 21 minutes. Still a long time. For the breakout, typically it hits within the first like 5 to 10 minutes, but the market hasn't really been very volatile these past couple of weeks. You guys have seen from March, Even for our other strategies, we had to take some time to wait for it to play out. But yeah, that's pretty much how the breakout would work. Is there any questions, Kenny? I haven't seen you put any input, so I'm not sure if there's anything that you're confused with or anything that you want me to cover in detail. But I showed you about like 4 examples here, 3 to 4 examples. So I'm pretty sure it's pretty clear how it's applied. But if there's anything that you're confused with, just let me know. I think the main thing that people get confused with is step 4, confirming a strong candle. So in order to confirm it's a strong candle, this is a subjective requirement. That's why I don't really like the strategy too much. I like the strategy in general, but it's not something that's easy to teach a beginner trader or even someone who's been trading for a while, because identifying a strong candle is very subjective. Some people will say it's a strong candle. Some people say it wouldn't be. Like, for example, the entry candle right here. See, the reason why I identify this as a strong candle was because the wick on the bottom is not that big, right? So here's an example of a weak candle. Let me just turn off the indicators here. So this right here would be a weak candle, in my opinion. There's a red candle right here, but the wick on the bottom is huge. So I would consider that a weak candle. I mean, you can just go through each candle and see what it looks like, because that's how you would train your eyes to see what's weak and what's strong. Like, for example, this green candle right here, obviously it's a weak candle because the wick on top is huge. It's like bigger than the body. So this is a weak green candle. This is a strong red candle, little wick on the bottom, strong red candle right here, little wick on the bottom. This candle right here is a red candle, but it has a huge wick on both sides. It's an indecisive candle. This right here would be a strong green candle, little wick on the top side, etc. But yeah, I mean, if there's anything that you guys are confused with regarding this, let me know, Kenny. Just haven't had any input from you, so I'm not sure if there's anything you're confused with or if you're cool with it. But yeah, I mean, it's pretty straightforward breakout. You're just looking for a strong candle in the direction of momentum and the direction of bias. Bias is not required, but it's highly recommended. So, all right, that's it with that right there. Let me go over to the next question. All right, next question is from, okay, Kenny, no problem. I just saw your message right there. B's asking, the high-level momentum seems to work really well on ES for 1-to-1, maybe even 1-to-2. Yeah, I haven't tested on ES, so I can't really say for sure. But yeah, if you've tested it, you guys are welcome to backtest the strategy on whatever assets you guys want to trade, whether it be YM, whether it be NQ, which is NASDAQ 100, or whether it be ES, S&P 500. Yeah, I mean, whichever you guys want to play around with, you guys are more than welcome to test it out. It's just, I don't really trade, like, I wouldn't trade ES because I'm already trading YM. It's pretty much the same thing. But they work on pretty much anything that moves smoothly. B's asking, did you have a look at NASDAQ? I haven't, but Patricia's been using it and she said it works. So I'll take your word for it, because she actually trades it very often. So she's back tested and she's tested it herself and tried it live, and she said it works. I can't say for sure, but if you guys want to go and test it yourself, you can go ahead and do that. Like, for me personally, I just don't use anything else aside from YM, because I'd rather focus on one thing and just master that versus use trading all these other assets, because I wouldn't be able to look at these assets anyways if I'm so focused on YM during that specific trading time period. Because you guys have seen during live, sometimes the market does get boring, but a lot of times I do miss trades because I'm looking at different things. So for me personally, I'm just going to stick to YM. B's asking, do you know what parameter she uses? Honestly, I have no idea, B. You probably ask her. I messaged her. Let me see if she's in here. I actually messaged her yesterday, but she hasn't responded to me. She's probably busy with her own trading. But I asked her a couple questions yesterday and she hasn't gotten back to me yet. So I personally don't know. I would assume it's the same thing, like 100, 300. Let me go to NASDAQ real quick. So let's see if there's any other entries here. Let's see if I could find an example. If I find an example here, we'd probably base it off that. Let's see, I'll just rewind this to 9 o'clock. Let's go like this. All right, let's just replay this to 9 o'clock. I'll see if I can find an example here, and then but I'm pretty sure it'd probably be around the same. It shouldn't be too much of a difference. All right, so there's a lower low right here, and there's a buy signal right there. Right, that'd be an entry for the strategy. Yeah, I don't know if it'd be a 1030. I mean, I've never traded NASDAQ, so I don't know what the parameters would be. I've only traded NASDAQ like once, and I just didn't like it because for whatever reason, it just seemed like it wasn't paying me out the same amount, and the movement's a little different. So I don't know what the sweet spot would be for something like this. I'm assuming it would be because if you do 300, let's see if I added a joke to this. Yeah, this is like, it's way too big, right? It would definitely wouldn't be 100 to 300. It would just be 1030, kind of similar to what we're using for US 30. And obviously this here works. Unless you want to do a 30-30, I mean, I guess it would work too. Yeah, so that one right there looks fine. I don't know if you'd use a 1030 or a 30-30, but it seems like either one works just as good. Let me see if there's another entry that came up here. All right, there's another one right here. Higher high. Sell entry right there. So if you use a 1030 split, I mean, they both look like they work fine. 1030 right there, full TP, maybe 30-30, full TP as well for a 1-to-1 or even more. It's just been more volatile. So the Nasdaq's been more volatile than US 30. So I don't know if this is a fluke, if this is just from today, but it looks like you could probably do a 1-to-1 here. There's lower low right here, buy signal right there. Same thing if you want to do a 30-30. I mean, you could probably even do a 2-to-1. I personally don't know because I don't trade NASDAQ, but looks like this one here is fine too. Here, let me scroll up real quick. I see your question, HP. I'll come back to you soon. Let me just finish what B's asking right here. So B said on the stop, how come it says 7.5? Is that not 7.5 pips? I thought we entered. Where'd you see 7.5? I've been using 1030 this whole time. Now the target's right. So the number is like right here next to it. It says 30-30. I don't know what that means by target. Let me see if it's, I don't trade NASDAQ, so I don't know what it looks like. Let me see what it looks like over here. Yeah, I don't know why the numbers are different. So I don't trade NASDAQ, so I have no idea. Like, honestly, I would tell you if I knew, but I have no idea. That's probably what was screwing me up too, like when I was taking these trades, because I was taking these trades myself and I didn't know what was going on, but I was making less profit. So that is weird. I don't know. Yeah, I think this might be 7.50. I personally, let me see if this looks different. Let me go to, yeah, honestly, I have no idea. I don't know why it comes up like that. Yeah, because if you look over here on US 30, it doesn't do that. It's actually how it's supposed to be, 1030. Yeah, he said it's the same thing for ES. Yeah, I don't trade any of these myself, so I can't really say if that's the case. But yeah, it's the same thing on ES too. Yeah, honestly, I have no idea, B. You probably want to ask somebody who actually trades NASDAQ and ES. I mean, you can pop into the chat. You can probably message Patricia yourself, but yeah, I wish I could answer your question because now I'm kind of curious, but I don't have any idea. That's weird, huh? It only does that for ES and NQ, but it looks like it's fine for YM. It's weird. Yeah, no problem, B. Does it change if you drag it? No, it looks the same. Yeah, I don't know. The target's just different. The number here is the same, but the target is different for some reason. Gotcha. Okay, that's what you mean. You just got to drag it so the target will say. Because you know what? These are So that's another reason why I don't like trading this, is because they're valued differently. But I get what you're saying, B. That might be the case where you drag it. And because it makes more sense this way, right? It looks like US 30 at this point when you drag it like that. And now it looks normal, because earlier it looked like it was too small. Okay, you might be onto something, V. So maybe that's why I was making like only partial profits when I was taking the trade. So the main difference between NQ and ES is that I know they're valued differently. I know ES is a lot cheaper than YM. So if I was to use 100 lot on YM, it wouldn't be the same if it was on ES. I probably would make less profit on ES. So exactly, yeah. So CJ just mentioned, could it be because it's US 30 is typically $1 per point, but with NASDAQ and SP it's like 50 cents per point? Yeah, exactly. So CJ is correct. I think that's the case, CJ. Yeah, no, you guys pretty much figured it out. I think that's the thing. So yeah, B, I think if you want to make it normally, you just have to drag it yourself, like manually, or you can just use this parameter now. So now that you know that 40-120 is going to be the 10-30 split, that's probably going to make more sense when you take the trade to get the same valuation as US 30. So yeah, I'm glad you brought that up, because now it makes sense. I was confused for like the longest time. Why did it look like that? But it makes sense now. So if you're trying to equate it the same way as US 30, it's got to be 40-70 or 40-120. I mean, yeah, it looks a lot better now. Gotcha. Okay, cool. Yeah, no problem, B. Thanks for the input. Now I kind of understand now how the valuation works. And thanks, CJ, as well. That does make a lot of sense. All right, let me scroll back up to HP. So HP said, today you mentioned something about your brother saying we can do 101 RR. Can we try and find some of those examples? Yeah, definitely. So let's go back over here. There was obviously no entries today. We'll go back to Friday if there was anything there. So let's go back to Friday, 9 o'clock. All right, no entry here. There was an entry right here. Looks like it was probably a loss though. Well, I wouldn't trade this late on a Friday, but let me see. I think this is the same loss that we took, right? I know we took a loss on Friday, but I don't think it was this specific one. But this one right here, we didn't take this trade. This is one that came up on Friday. Typically, I don't trade after 8 on Friday because the market does move kind of weird. But I think the Friday in general was kind of weird altogether. Here's one that was before 8. Let me just go back a little bit. So this one was before 8. There's a higher high right there, sell signal right there, broken close below the pivots. So this right here would be an entry for a sell. This one here doesn't look like it hits either, but the volatility on Friday was very low. So I think you'd have to play it by ear, HP, because I've looked at it here and the volatility for Friday was just too low. So for this right here, if you went for 100 pips, it would have hit TP, right? You would have hit TP if you used the actual strategy. But if you did a 1-to-1 right here, this probably didn't play out. Yeah, this one didn't play out. So I think what you have to do when you're trading these types of things is you have to look at the volatility of the market. If the market's moving slow, then it's probably best to use a 1030. That's kind of like the criteria that I put here as well. So it's the same thing that I mentioned here, right? I said use 1030 or 2550 for TP stop loss based on conditions. The conditions for Friday were low. So obviously you only want to go for 100 pips. If you took this trade here, it would have hit TP if you did a 1030. If you did a 30-30, it wouldn't have hit because the volatility is too low. And it just ended up reversing as price came back, the other direction. Let me see if there's another entry here. I think this entire week was kind of slow, right? So I don't know if we're going to find anything here. There's another entry right here, but this didn't play out, obviously. I forgot what was going on Friday, but the market was not moving smooth at all. We took one trade on Friday and it flopped. There's one entry right here. Let's see if there's one played out. So it looks like this is one that actually would have played out. Yeah, because the volatility was a little higher here. Volatility kind of died down later in the session, but earlier in the morning, it was actually moving pretty decently right here at 650. So at 650 right here, you can see the market was pretty volatile. So in a situation like this, you could probably take it because the market was actually moving. When the market's kind of flat, like this area right here, you probably wouldn't want to take, a 300 pip CP, because at that point, you probably would be stuck in the position or caught holding it for too long. You got to remember that you're still scalping. So for these entries, when you're scalping, you still want to be out within a few minutes. You don't want to hold on to the position for like 10, 20 minutes and then price ends up reversing on you. The problem with holding it for too long is that we're not using the overall bias like we usually do. So you can be taking a trade, but you can be taking a trade against the bias. So, you end up holding on to it for longer than you should. So for example, right here, volatility was pushing up a little higher than normal. If you would have taken the trade here, this would have hit too, but it would have taken a very long time. Right? If you held on to this position, you would have been stuck in this for like 20 minutes. That's way too long for a scalp. Like anything over 10 minutes is way too long. So for this here, I would have just done a 1030. And you can see what it hit on the first candle. This is how the scalps are supposed to hit. They're supposed to hit right away. Let's just keep going back. I'll see if I can find where the market was actually moving a bit quicker. Okay, so like this one right here on open. So I think you can use a 30-30 when the candle's too big. So for example, right here, this candle is way too big, right? So if the candle is big like this, volatility is actually pretty high. This is the opening candle though, so this is it's probably not one that we would take, because if this happened on open, we probably would have been afraid that price would have retraced down super heavy before swinging its way back up. But if this was a normal candle, and the candle was kind of big, like not opening candle, I probably would have used this for a 30-30. So instead of a 25-50, we can probably change this to 30-30 instead. But yeah, if you would have taken this entry here, you see price would have ended up hitting, but again, it would have taken a while. So right here, it took about 12 minutes, better than the 20 minutes, but still a little too long for a scalp trade. If you hold on to a position for like 20, 30 minutes, it's going to be considered an intraday trade at that point. Let's see if we go back a little further. I just can't remember when it was volatile, because I know last week was kind of weird. Market was kind of just going sideways for the entire week. Okay, let's go back to 9 o'clock over here, see if there's any other entries. All right. No entry there, no entry there, no entry there. No entry there, nothing there. Nothing there. There's one right here. I think this is the one that we took and it lost. But let me see if I can find another example here. Okay, so here's one right here. This is again at market open. Let's just measure it to see how the candle was. Okay, so for this one right here, again, I think the volume here is kind of decent, but it's not as volatile as we would want it to be. I mean, the high is still within it. So if you wanted to do a 30-30 on this one, I mean, eventually it looks like it hits, but this is on open again. So I'm not sure if it's one that we would technically take. There's a higher high there, price broken close below. Actually, this wouldn't have been an entry because the entry came before market open. Let's go back to the previous day, Wednesday. Yeah, it's just not a good time to test it because the entire last week was kind of trash. If you guys remember, it wasn't very good. We had a lot of pretty much just back and forth movement, no clear direction. Okay, let's see if there's anything here. No entry there. There's one right here, I think. See, like for this here, the volume's too low. So I don't think I would have taken a 30-30 on this one because the volume is just too low. You can see these candles prior to it, they're like very small candles. So if you have small candles like that, I would be better off and feel safer, more comfortable taking a 10-30. So for example, right here, 10-30, this would have hit your TP. But if you went for a 30-30, you probably would have gone stopped out because you would have been holding on to the position for too long. Yeah, this thing would have ran on forever. You can see here, and then it ends up not playing out. So you got to play by. I don't think I would take every trade for a 1-to-1. It just depends on how the market's moving. If it's moving very volatile, then yeah, take it. But for example, here, if you did the 1030, you would have hit your TP on the first candle. But if you held on to this, you would hit your stop loss 30 minutes later. So, I mean, yeah, you could see that it's not good at all times. Like for the past week, probably not, because the market wasn't very directional. This week or today would have been a good day though, because the market was moving directional. It was pretty obvious that, all buys would have been pretty solid. So, let me see if there's anything else here. So there goes, some examples of the 1-to-1. But again, I wouldn't really, if you want to use the 1-to-1, just use the, instead of using a 25-50, just switch that to a 30-30, but based on conditions. So the volatility has to be at least moving, to some extent. All right, let me scroll down a little bit. So HP is asking, what are your thoughts on having the option to change the color of higher high and lower low? I mean, for me personally, I haven't had any issues with it. So I don't, it's not something that I would necessarily care for. Yeah, I don't know if anybody else wants. I think it's perfect how it is now. Because, well, I mean, if color is like a big indicator for you, then yeah, maybe it's something that you could that we could change. But I haven't heard anybody ever request that. So I don't know if that's like something that you want, HP, or if anybody else wants. We can put a poll in the group if that's something that you want, to incorporate the colors. But for me personally, I just look at the HH. Like I don't even care about the color. This could be like yellow for all I care, and I'll just see, because the color doesn't dictate what I'm looking for, right? Like the green doesn't mean I'm looking for a buy, and the red doesn't mean I'm looking for a sell. I'm really just looking for the HH or the LL. Like I pretty much ignore these. Like when I see a low high or a higher low, I don't even notice those at all. The main thing I'm looking for is really the HH or the LL for this specific strategy. But if that's something that you want, let me know, and I can probably have my brother update the indicator. But I've never had that request from anybody, so I'm not sure if that's like something that people want specifically. Yeah, no, if that's the case, we could probably I'll probably I'll let him know, and then he can probably have the option. It's not too difficult. He just needs to change the code a little bit, because he already added the code for the only higher highs and lower lows. Yeah, no, that's fine. I'll message him after this, and then we'll I'll message him right now. I don't even know what he's doing right now. Let me see if I could. I got to ask him for that backtest script anyways, so we'll see. Okay. Yeah, no problem, HP. All right, so I'll see what he says. I'm pretty sure he can do it. It doesn't seem like it's a big change to the indicator. And then so when it does update, I'll let you know. And then you'll probably get an email from TradingView just saying that I updated it. They usually send an email out to let you guys know. Yeah, whatever makes it easier for you guys. We can make adjustments. All right, let me scroll down a little further. Kenny's asking, do you recommend looking at my FX book for news before market open? You should always look at news regardless, Kenny. So I do that every morning. If you're always on my live session, so you know that I do that every morning. You should always know where news is coming up. Like that should be one of the main things that you should be focused on, because you don't want any surprises. If you're taking a trade, you don't want to like be in a trade and then all of a sudden price spikes and you have no idea what's going on. So yes, I do recommend that you check news. It doesn't have to be on my FX book, but you should definitely check news to be aware of where price is. But you're on the live session with me, so it doesn't really make, like, you don't really need to do it because I mark it up for you guys on the chart. So I mean, if you want to do it, do it. I think it's a good habit to go and check news every morning, but realistically it's not really necessary because I do it for you guys. So yeah, you should know where news is at, especially like today. Today we had the heavy news. I mean, it didn't really affect market too much, but yes, we did have heavy news this morning. Let's see. All right. John's asking, can you go over the high-low scalp? Yeah, sure. So I'll go over the high-low scalp. There's a couple entries that came up on the high-low scalp today, I believe. Let me go over here to, I'll just rewind it to 9 o'clock. All right, so 1 minute high-low scalp. So for today, we had a bullish bias. So I know there's high-low scalps that came up over here, but we probably wouldn't have taken these because, obviously there was no bias here for a sell. So let's see. These are, I mean, they're not irrelevant, but okay, let's just go over here real quick. Let me see if I can find any, and then we'll just go in this direction. So I'll look at all the high-low scalps from this morning, John. So let's go over here from this right here. Okay, so first you want to confirm the overall bias. We did this earlier. We confirmed retail sentiment was about 67% short. So we were looking for buys. Fundamental bias was bullish. It was up about 200 points. And the technical bias from this morning, pretty much all day, was bullish. So with that said, we're only looking for buys. Second, you want to confirm the previous high-low using the high-low indicator. So we have one right here. So looking at this criteria, I know that we put 5 candles must pass, but realistically, you just want to make sure that this label doesn't disappear. I only put 5 candles because it was hard to really tell people to look for the label because there was a lot of confusion there. But this requirement is really just confirming that this doesn't repaint. So like, for example, here, this candle broken close past it, right? If this was repainted, this here would have disappeared. But since this here didn't disappear, this would be established as the high at that point. So with that said, first confirm the overall bias, which is bullish. Confirm the previous high-low. There's a high-low right there. You can kind of ignore this because you just want to make sure the indicator doesn't repaint. That's the main thing that you're looking for. You can use it if you want, but for example, here, so there's 1, 2, 3, 4. This is the 4th candle. So if you were following this to the T, you probably would have skipped this entry, which is fine. You could have looked for the next one. But for me personally, this requirement just means that the high-low hasn't been broken, like it hasn't disappeared. So with that said, confirm the overall bias, confirm the previous high-low, which is right here, confirm price breaks and close past the previous high-low. So this candle over here broke and closed past it. And you want to confirm that you're trading in the direction of momentum using the K2 momentum indicator. We have a buy signal right here. So this confirms that price is moving directional. And price is also not ranging because price is obviously pretty bullish right here, right? Pretty obvious price is bullish. So with that said, confirm price has not touched the previous swing before the break and close. You can see here between this high and the following candles that these candles never touched the high, right? So with that said, you would enter this for a long position right there. You would go for an easy 100 pips. You let the trade run and full TP on the next candle there. So that goes for the first entry. There goes the first one right there. Again, there's another opportunity right over here. So we have another high right there, right? Let's go ahead and look for price to break and close past that. All right, so price broke and closed past this high right here. This is a better example because now we do have the 5 candles that have passed it. So again, there's another example right here. Confirm overall bias, that's bullish. Confirm previous high-low, there's a high right there. Confirm price break and close past the previous high-low. Price right here broke and closed past it. Confirm price is not ranging. It's not ranging. Confirm you're trading in the direction of momentum. We have a buy signal right there. And confirm that price has not touched previous swing before the break and close. So right here from this high, none of these candles have touched it, right? So with that said, there's another valid entry right here for a buy. You have that set up right there. Go again for another quick 100 pips. You let the trade run. And there you go, full TP right there on the next candle. So there goes that. We have another opportunity right here. Let's drag this up a little higher. So 2 back-to-back wins right there. You're looking for the same thing again, right? We have a high right here. You're looking for price to break and close past it. All right, so price came up right here. This is where Step 6 was invalidated, right? So with that said, we have overall bias as a buy, confirm the high low right here, confirm price breaking close past it. Price touched it, but it didn't break and close past it. It just broke past it, but didn't actually close. So with that said, we can't confirm the entry here. On top of that, confirm price has not touched the previous swing. This is touching it right here. So this is no longer valid, and you can't use this for an entry. You move on to the next high, which is right there. Same thing again right here. We're looking for price to break and close past it. You can see that this candle right here touched it, so this invalidated it again. No entry at that point. Yeah, you can see it, like price touched this area like 3 times. So there's definitely no entry there. So no more entries here for any buys. I'll clean this up a little bit, and then we'll just move forward a little further. We're looking for some more buys here. All right, so there's a high right here. All right, price is pushing back up. There's another high right here. All right, so there's another criteria right here, or another example right here. Confirm overall bias, obviously it was bullish. Confirm the previous high low. There's a high low right there. Confirm price breaking close past it. This candle right here broke and closed past it. Confirm trading the direction momentum. There's a buy signal there. Confirm price is not ranging or consolidating. Price is moving bullish right here. So it looks fine. Broke out of the structure. Right, bullish trend right there. Next, you want to confirm that price has not touched the previous swing. Again, right here, there's a high, and none of these candles touched it. So with that said, long position right there. Go for a quick 100 pips. Let the trade run. Full TP right there. So there's an example of pretty much all the high-low scalps from this morning. I think there was maybe one more. Let's see. Another high right there. These candles touched it, so these become invalidated. There's another one right there. This candle almost touched it. Touched it right there, so invalidated again. Okay, so another example right here. Price broke and closed past it, same thing. Overall bias is bullish, high low right there. Price broke and closed past it right there. Bullish momentum. Price is not ranging or consolidating. This high hasn't been touched. Again, right there, another long position. Go again for 100 pips. Full TP. So pretty simple. As you guys can see, there's like about like 1, 2, 3, 4, 5, or yeah, 4 entries right here, all full TP. And it just continues. It's a very simple strategy. I know a lot of people try to apply this on their own, but I wouldn't really recommend it because it's difficult to really identify these high lows that are actually valid, right? At this point, it was past 9. I would have been done trading at this period. So there goes the example of the high-low scalp strategy. So, all right, guys, if there's any other questions, feel free to put them in the chat. I don't see any other questions, but if there's anything else that you guys want to cover, just drop your question in the chat, and then we can cover whatever you guys need. You guys need help with. Yeah, the high-low scalp's a good strategy. So for the original one, you could use pretty much any type of high-low. From my experience, it seems like the ones that are higher highs or lower lows are a lot better to identify with. Like for example, here, these are like smoother moves because they're breaking higher highs. This over here was a high-low. You can see price did break past it, but it took a little while for it to hit. It took about like 4 or 5 candles. Same with this one right here. There's a higher high. So you can see the difference. This is a lower high. And this is a higher high. This one here took a little while to hit. This one took like a little quicker. It took about like 2 candles to hit. This one over here took about like 3 candles. They still hit, but I think criteria is a little better if you're using a higher high versus a high low. Let's see, HP is asking, can we get a trade if we get a signal and the candle close lines up exactly with the pivot? It has to pass that HP, so it can't be lined up with it. It's got to be past it. That's the whole point of the high-low, like the breaking close past it. Because if it doesn't break and close past it, then it doesn't meet criteria for that specific strategy. So every strategy is pretty strict. There's no in between. There's no discretion, right? So like If any of these criteria are not met, then there's no entry. They have to be strict requirements because that's how we pretty much produce these strategies. We used it, and I've tested it before like that. So like what you mentioned, HP, I've done that before, and it does work sometimes, but a lot of times it's not. It doesn't always hit. Like I create these strategies with the requirements in mind. So like the requirements have to be met. There's the whole point of having requirements, right? Because if there was any discretion, then it just wouldn't be systematic. Because then in that point, you kind of you're going off the fly, right? Like for example, you have an entry, but it's really close, and you just want to take it. You could take the entry, and then if it loses, you just blame yourself because you're like, oh, I didn't fit the criteria, and that happens with me a lot. Like for example, today the entry that I took for a buy, I should have exited that trade. I shouldn't have held on to it, but I still took it anyways. So like if you guys remembered from this morning, this candle here like closed at the very last second. Like I always warn you guys to wait for the candle to close, and I waited for it, and I swear it closed, but at the last second it just disappeared. I was already in the position to hit buy exactly at the 1 second mark, and I should have pulled out. But this is a bad habit, because if I do this more often, where I keep taking these trades that aren't confirmed, then it's gonna come down on me once I have some losses. So yeah, Madhu said he took it too. Yeah, the trade just looked so good. We were waiting for it, and I was counting down to like the 1 second mark. As soon as the 1 second mark came up, I hit buy because I thought it closed. Like I swore it closed. And then the second later, it just disappeared. And I was like, crap, I was in position. So I ended up just holding it, and thank God it like kept going up, and then ended up blasting right through my TP. So yeah, I know, but it was a close candle. And I think we were just getting impatient because we were waiting for it, for so long. Like we waited for this position for like over an hour, or over almost 2 hours, and it just never came. So I kind of just YOLO'd that trade, held on to it, and thankfully it hit. All right, guys. So I think that's it for the questions. If there's any other questions that you guys have, feel free to put them in the chat, or you guys can always email me. Let's see. CJ's question is, couldn't we apply the high-low on a downtrend using lows on the way up? I mean, you can, but that's not the strategy, CJ. So going back to the requirements, guys, first requirement is to confirm the overall bias. So if there's no overall bias for a sell, then you definitely don't want to take a sell. You technically can. I mean, you could take it if you really wanted to, because obviously there was a lot of entries here that came up. But, again, it's not the strategy. So if you guys are welcome to do whatever you want, right? You guys are more than welcome to do anything you want. If you guys want to apply the high-low scalp and you guys want to disregard the first criteria, you guys can do that. But you guys got to remember, if you lose a trade, you got to understand that you lost a trade because you weren't following the strategy properly. Because again, like I mentioned before, CJ, it's a bad habit, right? If you try to like interchange the criteria here, like we tested these strategies with every requirement here. There's a reason why we have every requirement here. Initially, we didn't have the bias. So if you guys remember this strategy, when I first created it, we didn't have this first criteria, right? So if you're applying the original way of applying the strategy without this criteria, it still works. But if you guys remembered, we got a little too cocky, right? So like we didn't have this criteria here. This was like not there before, and we were winning trades. But eventually we started running into some losses, and we figured out, okay, how could we avoid those losses? It was by confirming the overall bias. So short answer to your question is yes, you can apply the high-low scalp in the other direction, but it doesn't meet the criteria for the updated strategy. And we updated it for a reason, right? Because we started losing when we started applying the strategy. And that's typically how strategies will work. Strategies will look very perfect sometimes. And then, in order to make it pretty much profitable long-term, you got to make small little adjustments to them to prevent yourself from getting into too many trades. Because, like you want to make sure that you're taking quality trades, especially if you're taking a strategy that has a negative risk to reward. So for example, here, I mean, you could have taken a bunch of entries here. Like for example, let's see, not this one because it touched it, not this one because it touched it as well. This one over here would have been an entry, solid entry, would have been a full TP. This one here wouldn't have counted, and this one here wouldn't have counted. So there'd technically only be one entry here, because this one here, the pivot, the candle touched the high-low, and same with this one down here. So Yeah, I mean, if you guys want to apply it that way, feel free, but just, keep in mind that, we added that criteria for a specific reason because we started to run into some losses. Let's see, Medusa, the signal definitely flashed on the 1 second left, but didn't actually close. I wish I would have held it with Sean though. Yeah, I know. I was kind of sweating for a second there, Medusa, because when the candle didn't close, I was going to tell you guys that I was in the position, but I didn't want you guys to hop into the position with me. So, I didn't want to take the blame for people hopping into an invalid position, especially when I try to, I try to lead by example, telling you guys not to hop into trades early. But sometimes it happens. Like sometimes you'll just hop into the trade a little too early, and it won't fit the criteria. But eventually, it'll play out if you have other confluences. So the reason why I was okay with this entry here, as I mentioned before, was that we had a strong bullish bias, right? Overall bias was super bullish with regard to the trend, and then also a couple other things here that I looked at. I saw the rejection off the session, and I saw price correcting back up. Because if you remember from this morning, I kept looking for price to swing back up. It never swung back up, and it finally swung back up right here. So I knew price was going to push up at least enough for me to hit my TP. That's why I took it. So sometimes you guys can take riskier trades if it meets your criteria or if you have enough confluences. And this one here just met up my confluences. We had a rejection off the session here, had that nice bounce. Price broke and closed past it without the momentum, and then eventually just followed through. So, all right, guys, if there's any other questions, feel free to put them in the chat. We've been on this mentoring session for about an hour and 20 minutes. I'm free to stay on with you guys if you'd like, but if there's no other questions, looks like we'll be wrapping this up, and we'll be coming back for tomorrow's next live session. All right, guys. So I think that's it with the questions. If you guys have any other questions, feel free to message me on Telegram at Kodi Kai Trades. Or if you guys are new here and you guys want access to the strategies that we just covered, we have a lot of strategies here for you guys to look at. If you guys want to watch the strategy videos, just go to the website, kodikaitrades.com, click on unlock your free access. That'll give you access to the course here. And the course has pretty much every strategy that I've taught you guys over the past, 5 to 7 years now. So I've been teaching you guys for a while now, and every strategy I've ever used and taught to you guys is available on the course. So if you guys want to watch the videos here, it's completely free. You don't have to pay for anything. And if you guys want to rewatch any of the previous live sessions, just pull up the YouTube channel, youtube.com/KodiKaiTrades. And if you go over here and scroll down, everything with the blue background is a previous live session. Everything with the gold background is the previous results. Everything with the green background is the previous mentoring sessions. And everything with the red background is every strategy video that we have here. So, all right, guys, I think that's it for now. If you guys have any questions, feel free to reach out. Otherwise, I will see you guys back here tomorrow.